What's up, guys? Welcome to the distribution video. Okay, so in the previous video we covered accumulation, what that is, what that means. So just see distribution as the inverse of that, the conversion of demand to supply, right? Essentially from going up to now going down, right? As for the stock definition, I would say that it is the overall release slash selling of an asset supply over X period of time at X desired price, which is usually a premium. It should be a premium, or else it really won't make much sense, right? But all distribution is, right, is essentially the inverse of accumulation, right? So let's get to it. Let's see. Okay. So example number one, we're looking at EURUSD. Excuse my dogs if you can hear them. I'm so sorry. But anyways, right, we start off with our preliminary supply, our buying climax, right? Once again, unfortunately, we don't get that, that peak in volume, that climactic volume, right? But that doesn't mean that we still can't use volume inside of the schematic, and that still doesn't mean that the schematic still won't happen, right? So immediately following our buying climax, we're still bullish, right? We have our automatic rally, our secondary test, which was a liquidity grab per se, right? Because after this, we inevitably came to a break of structure, which was our SOW, right? So this SOW is the first sign of intent, right? So this is a great example as to why we don't just wait for that scalp BOS and then look for 50% of SC, right? That's such a linear way of wanting to trade, because just because you have this scalping BOS here, you still got to keep in mind your leg is bullish, right? So we have to see unwillingness. We have to see a reason to want to go lower, right? So this is just a sign of weakness, but the sign of weakness is just a pullback initiation because we took out the initial level of structure, which then led to the pullback, which then led to low, high retracement continuation, right? Back into our upthrust, right? So immediately following our upthrust, right, we have our first preliminary structure break, right? Now, why do I consider this optimism? Right, because we did not substantially break this high and we immediately reacted after taking that out. Not to mention we did mitigate right before that. I would probably call that a micro break of structure, scalp break of structure. Doesn't really matter, but I'm just acknowledging that this final push down here created that final move to the upside. So even this is a micro break of structure. I'd consider this more of a scalp if we really want to get technical, right? But anyways, the sign of optimism, right? This is a disruption here, right? Because we're taking out bullish order flow. Why? Because we've already tried mitigating once to go higher, but that only led to unwillingness and a break of structure. So this is now optimism to me to want to go lower, and intent to want to go lower. So what happens immediately after that? We come back to mitigate a wick that mitigated a previous candle, right? Which then led to the wick mitigating the next wick, right, which led to our LPSY, our final SOW, which essentially led us to price down, right? And this is the creation of bearish order flow, right? The transition of bullish movement, right, to then have a quote unquote liquidity grab here, which then led to optimism and a last point of supply, which led to bearish order flow, bearish continuation, bearish movement to the downside. Okay, so, and notice that too, right? I forgot to add this detail, but right when we're after our SOW, after we create that that non-substantial high, right, which led to the liquidity grab, right? Keep in mind that the volume is diminishing while you're on your way up. So that already doesn't make sense. It's already justified as to why this is, as to why it makes no sense that this is continuing higher, right? So it's just an extra confirmation, right? So we're reading the effort through the volume, the structure, right, and the reactions, right? All we're doing now is trying to catch order flow, right, and catch the move. Okay, so example number two, right? It's actually a much bigger scale example. This is one that we've been talking about since RCV launched last year. And I know that a lot of you that are reading this that saw the old course, right, know that we've been bearish on this for since before even RCV launched, right? And that's just because we've been seeing this from a Wyckoff perspective, right? And right after our preliminary supply buying Climax, although we didn't have that climactic action, I don't expect it to be, because we are talking 3-day time frame, so it would take a lot of volume to give you that climactic action, right? So I don't necessarily need to use volume here, but I am being aware of what's happening. But for the most part, you are seeing that supply and demand is heavily or is very constant. So for the most part, I would pretty much not use it until I see a sign. So we have our automatic rally after our buying climax, right, which then led to our secondary test, which was a technically a liquidity grab because we did take the initial level of structure after taking out the high, right, which is a secondary test, right. We then are still in consolidation, very messy price action, nothing really that is attractive to me, right. But because this automatic rally led to the break of this high, right, so even though this liquidity grab didn't lead to an overall structure break, right, this is now considered bullish, right. So all of this is only a retracement, which then led to price coming higher to then give you another high, but it didn't substantially take it. So it's also unconvincing, right. And it's also very messy, which not only signifies that it's not something I want to trade yet, right, but it also signifies to me that we are inside of a trading range, right, which is now when I would start wanting to apply Wyckoff concepts. Um, so right after this liquidity grab, because we took out the previous high and then took out the initial level of structure, right, we then came to a bearish break of structure, which led to the SOW, right. But the SOW didn't take out full on structure. There's still liquidity down here, so it would make sense for it to come up, give you some type of retracement and then go lower, right. But unfortunately, that's not what happens. Why? Because price needed to give you a UTAD, which is essentially the inverse of a spring, right. And this is carrying a ton of volume, right. So it's hard to try to guess this high. So it's not something I'm trying to guess. Um, but right, something to note, right. High volume, high movement, but there is no substantial new high made because we took out liquidity, then immediately reacted lower. So this to me is looking like a potential UTAD, a potential liquidity grab on an overall scale, right? It's just now a matter of time whether or not this is going to reverse. It's a matter of when this is going to reverse, right? So we had this high volume, we had this high movement here, but we inevitably came lower, right, to then potentially mitigate something inside of this candle, right? But this mitigation did not take out the high, right? So after we came back up higher, right, we came into our LPSY, which mitigated something up here, which then led to a bearish break of structure, which solidifies this high as an LPSY, and it's solidifying, right, that our schematic will more than likely play out, right? So after that, we came back, gave unwillingness to take out the previous high, and inevitably that is bringing price down. So now we're essentially anticipating price to come back into these relative equal lows, give you that full SOW, and then give you an LPSY, which will then give you a very, very, very big move to the downside, right? So very, very interesting to see, right? And I'm mainly just showing you this to show you that any schematic can happen on any time frame, right? I've shown you M1 examples. Now you're seeing 3-day examples. You've seen 2-week examples, right? So, but just keep in mind what I said in the first video, right? If you have a M1 schematic, don't expect a ridiculously big move, right? And if you're looking at a higher time frame schematic, right, also don't try to rush it. So just be logical about it. Have some common sense. Anyways, on to the final example, right? This one, right, is actually a good example of seeing that essential buying climax, that climactic action in the volume, right? Because although it's not extremely high volume, it is higher than the essential norm here. So that is showing me climactic properties, which has led to here, right? Our buying climax, which led to our automatic rally, right? Which then led to our upthrust, a new higher high with unsupported volume, because you can see it's pretty much non-existent at this point. But keep in mind, we still are bullish. Why? Because we did have that bearish peak, but no movement. So it only makes sense for this to continue higher, right? Unless we get a sign. So after the upthrust, we get our initial SOW, but we're still bullish. Okay? So just because you get that initial structure break does not mean you're going to get the entire reversal. Just always remember that, right? Structure rules. Okay, so after the SOW, we led into a UTAD, right? But still keep in mind that this is not, supported by any type of demand anymore. Why? Because we've already had the climactic action occur, right? So after our UTAD, right? This third wick here would be your test. I just didn't mark it out. I think it looked a little bit messy. That would be your test, right? Which this then led to more optimism, right? But the key difference here is that we're seeing supply appear. Supply is appearing, right? Now keep in mind that every impulse has a retracement. So even though we have, a kind of like a liquidity grab here, we have high supply volume, right? And even though we have even higher bullish volume, look at the effort that it's taking for it to come higher, right? There's high volume, low movement, instability. It doesn't make sense, right? So inevitably this ends up being your LPSY because it's taking too much effort for it to go up when supply has already transitioned into itself. So naturally price has to come lower, right? So as you can see, the keys isn't to know what a buying climax is, what an upthrust is, what a UTAD is, what an LPSY is, right? The key is to understand volume. The key is to understand structure so that you can make proper conclusions based on the information that you're given, right? And always want to be logical, always want to make it make sense, okay? So that covers the distribution video, and I'll see you guys in the reaccumulation video.